Welcome back to the Deep Dive. Today, we've got a really interesting one lined up. We're going to cut through the noise and drill down into the performance and strategy of Torrent Pharmaceuticals. We've been digging through their Q2 financial results, specifically the earnings called transcripts and statements. This is for the quarter ending September 30th, fiscal year 26.
Right. And our mission here, it's pretty straightforward on the surface, but the results have layers. We really need to pinpoint what's driving Torrent's surprisingly strong performance because they are outperforming.
They really are.
We also need to, face the music on some international operational challenges they're having, and maybe most importantly, unpack their pretty aggressive strategy. High-stakes stuff focused on global growth and a couple of really high-potential new drug launches.
And the immediate hook, like you said right off the bat, is that this isn't just, slow and steady growth. Torrent's showing really robust double-digit growth.
Yeah.
And unlike a lot of their peers, that growth is overwhelmingly coming from their branded markets. That tells you a lot right away about where their strength lies. Hashtag the Q2 scorecard performance and efficiency. Okay, so let's get into the hard numbers first. If you look at the consolidated figures, Q2 FY26 versus the same quarter last year, the top line is, well, it's impressive. Revenue hit R3, 3,302 crores. That's a 14% jump year over year.
It's a great top-line number, definitely. But frankly, what's maybe even more telling is the efficiency side. Operating EBITDA.
Earnings before interest, taxes, depreciation, amortization.
Exactly.
Yep.
It hit our 1,083 crores. Now, that's up 15% year over year, but crucially, it maintains this world-class margin of 32.8%.
Okay, wow. And then the bottom line, net profit after tax, PIT, jumped 30%. To 591 crores. That's a huge acceleration.
It is.
Is that kind of 30% PVT jump sustainable, though? Or is there maybe like a one-off tax benefit hiding in there that boosted the numbers?
That's a fair question. I mean, there are always small adjustments quarter to quarter, right? But the core growth here seems pretty sound, mainly because of that revenue profile you mentioned earlier.
The branded markets.
Exactly. If you look at the source stocks, 73% of their total revenue this quarter came from those stable, predictable branded markets. That focus gives them a huge buffer.
Right.
Plus, they're managing their debt incredibly well. Their overall leverage, net debt to EBITDA, is sitting at a very healthy 0.45x.
Okay.
They've got room to maneuver. They have runway.
And speaking of runway, it's good to see they aren't, pulling back on investing in the future either. R&D spending was Rs 156 crores. Pretty consistent, holding steady at about 5% of revenue. So they're keeping that investment up while still delivering that high profit growth.
Yeah, balancing both. That's key. Hashtag deep dive into the India business, the chronic core.
Okay, let's zoom in on the anchor then, the India business. Revenue there hit Rs 1,820 crores, delivering 12% growth. Now, if you look across the whole sector, 12% is strong, definitely. But how does that stack up against, the rest of the market in India?
That's the crucial comparison, isn't it? We know the overall India pharmaceutical market, the IPM, it only grew about 8% during that same quarter.
Only 8%. Okay.
So Torrent's 12% growth isn't just good. It means they're significantly outperforming the broader market. They're actually eating into competitors' share.
Right. So how exactly did they pull off that market share gain? Because when we slice the data using those AIOCD figures, the retail tracking data, it tells a really interesting story about volume.
It really does. When you break down that 12% growth for Torrent in India, their volume growth was 3.7%.
Okay.
Now, why is that so important? Because overall market volume growth in India during that period was flat, 0%.
Zero.
Zero. So Torrent matched the market on price growth about 5.5% for both. And they slightly outpaced on new products contribution, almost 3% versus 2.5% for the market. But they absolutely crushed it on volume. They're just selling more units.
So if the overall market isn't really expanding in terms of units sold, they must be actively taking customers from rivals. What's the main driver behind winning on volume like that?
Well, it seems to circle right back to their core strategy, that focus on the chronic segment.
Right, the long-term therapy.
Exactly. Their chronic business thing, cardiac, diabetes, CNS therapies, that part grew 13%, which, again, is higher than the overall IPM chronic growth of about 11%.
So outperforming even within their key segment.
Precisely. These are the high-value, long-term prescription areas where they already have a strong foothold. So growth here tends to be, well, sticky.
And operationally, it looks like they're really pushing this strategy hard. Their field force expansion seems to be right on track. They hit 6,800 reps this quarter.
Yep, aiming for 7,000 by the end of the year.
And it's not just random expansion, is it? It sounds like it's targeted specifically at those chronic segments.
That's what the commentary suggests, really doubling down where their strongest cardiac, diabetes, CNS. Makes sense.
Yeah.
And we should also probably call out the Curatio business they acquired. That seems to be proving a pretty savvy move.
The dermatology portfolio.
Yeah, that portfolio grew 29% in Q2. 29%.
Wow. How?
Well, the growth was apparently fueled directly by some smart demand generation, like OTC advertising, and also by deploying their field force into regions that Curatio didn't previously cover.
Okay.
It really shows they're successfully integrating and accelerating those acquired assets. It's not just sitting there.
That's a good sign. And just one quick housekeeping note from the sources. The recent GST implementation change seems it had a minimal impact, maybe 0.5% on growth.
Yeah, about 0.5% impact, they estimated. It kind of reinforces the idea that their core India operations are pretty stable and resilient, even with minor regulatory shifts.
Good to know. Hashtag global markets growth, pipeline, and supplier roadblocks.
Okay, so speaking of resilience, maybe let's pivot to the global picture. Because when you look outside India, you see this really fascinating contrast. Well, a tale of three continents, you could say.
How so?
You've got really robust growth in Brazil, a bit of a bounce back happening in the U.S., but then this painful, very specific headache in Europe.
Okay, let's start with the positive then.
Right.
Brazil. That continues to be a star performer for them in branded generics, right? Outside India.
Absolutely. Revenue there was up 21%, or 13% if you adjust for constant currency.
13% constant currency.
Strong.
Very strong. And again, market outperformance is the key theme. Torrent's growth was 15% in Q2 locally. The overall market, only 7% according to IQVIA data.
So doubling the market growth.
Pretty much. And their pipeline looks solid there, too. They mentioned having 65 molecules already filed and just waiting for approval from Anvisa, Brazil's regulator.
65. Wow.
Yeah. So that branded engine in Brazil seems to be firing on all cylinders.
Okay. Meanwhile, the U.S., which is purely a generics market for Torrent, right?
Correct.
That's showing signs of life after what sounds like it might have been a bit of a quiet period. Revenue up 26% or 21% in constant currency. What changed there?
Yeah. It seems like a targeted bounce back. The growth, according to them, is directly tied to a couple of things. New launches finally gaining some critical market share and also increased purchase volumes on their existing contracts.
Okay.
So it suggests maybe a more focused, more effective approach to their U.S. generic launches than perhaps we've seen in the past few years.
Right. But then we hit the snag.
Yeah.
Europe. Germany specifically is a key market for them. Revenue there was down 5% in constant currency. What's the specific issue? The source material suggested it's not like market demand has collapsed.
That's right. It's not demand. It's described as an externally imposed operational roadblock. Basically, it stems from a continued supply disruption at one specific third-party supplier.
Just one supplier causing that much trouble.
Apparently so. And management expects this bottleneck to actually persist and impact Q3 performance as well. They're hopeful things might normalize by Q4. It's kind of a perfect example of how even a successful company can be held back by, a single critical partner failure. They did say they're actively pushing that supplier to sort things out.
You'd hope so. Okay, that paints the current picture. Hashtag the strategy play, semaglutide, and generic ramp-up. So the global picture shows, well, mostly stability with that one German issue. But the real excitement, and maybe the real risk, seems to be in the strategy looking forward. We have to talk about semaglutide.
Ah, yes. The GLP-1 analogs.
It's arguably the biggest market opportunity in pharma right now, isn't it? And Torrent is making a pretty big play here.
This is definitely their big gamble, yeah. And it spans both India and Brazil. If we start in Brazil, their application for their version of semaglutide is already filed with Anvisa.
Okay.
They're looking at this as potentially a billion-dollar generic market down there. And they're targeting a really aggressive 10 to 15% market share.
10 to 15% of $1 billion.
Yep.
Yeah, that's significant. But the source material also mentioned some regulatory uncertainty. What's the hurdle there?
Well, the hurdle seems to be the regulator itself. Anvisa is apparently treating these GLP-1 filings differently. They're calling them priority filings, but the specifics of the approval process, and especially the timeline, are highly uncertain. So capturing that early market share really hinges entirely on the regulator's speed, which is, pretty much out of Torrent's direct control.
Okay, so Brazil is filed but waiting. What about India? They want to be in the first wave there, right?
Yeah.
Especially after seeing how quickly products like Monaro took off. showing huge domestic demand.
Exactly, they saw that success. So they're planning both injectable and oral versions of semaglutide for India, aiming for launch within the next financial year, so FY27.
Injectable and oral. But is the timeline there also a bit fuzzy?
Correct. The launch timing in India is also kind of hampered by uncertainty, specifically ongoing patent litigation.
Ah, patents.
Yeah. So they're prepared, they're doing the work, they're filing, but they essentially have to wait for the legal dust to settle before they can officially launch into what could be an incredibly lucrative segment for them in India.
Okay, this raises a really important strategic question then. How are they balancing this, high-risk, high-reward blockbuster chase with their core, stable, generic business? Especially in the U.S., which you said had seen a bit of a dry spell.
Yeah, and we see a very distinct strategic shift discussed for the U.S. generics market. Management actually called their U.S. business a battleship, saying it takes time to turn around.
But Battleship, okay.
Yeah. So the plan is a massive ramp up in their U.S. generic filings. This fiscal year, they projected maybe 4 or 5 filings. Next year, they're aiming for 10.
Doubling it.
And the year after, they're targeting closer to 15 filings.
Wow, okay. That's a tripling of their U.S. pipeline activity over just a couple of years.
It is, and they state it's necessary to return that U.S. generics business to what they call sustainable profitability after what's been, a multi-year dry spell.
Makes sense. Are they planning big investments for this? Like new plants?
Interestingly, no. The good news, they say, is they're not planning large capital expenditures for this ramp-up. The focus seems to be on maximizing the R&D infrastructure they already have and maybe strategically partnering for some niche assets.
Okay.
So it looks like a calculated multi-year rebuild strategy for stability in the U.S., running in parallel to that big semaglutide gamble, #corporate development, the JB Pharma acquisition update.
All right, let's shift gears one last time then to their corporate moves. Specifically, the massive acquisition of JB Chemicals and Pharmaceuticals Ltd, or JB Pharma. What's the latest on navigating the regulatory maze for that deal?
Yeah, that process seems to be moving along pretty smoothly, actually. They've received all the critical initial approvals.
Okay.
That includes the Competition Commission of India, the CCI, though that approval is subject to them complying with a few voluntary modifications they offered.
Right, standard stuff sometimes.
Yeah. And they also got the green light from the Competition Commission of South Africa. Plus, importantly, they secured the SEBI approval for the minimum tender offer, or MTO.
Okay, remind us, what exactly is the minimum tender offer, and why is getting that SEBI approval significant for the timeline?
So the MTO is basically the formal process where Torrent offers to buy a minimum number of shares from the existing public shareholders of JB Pharma. It's required by regulators to ensure they secure majority control after the deal announcement.
Got it.
Getting SEBI's approval for that offer is a major procedural hurdle cleared. It means the offer process itself can now proceed.
Okay, so with those approvals in hand, when can we expect this whole transaction to formally close?
Well, the MTO process itself is expected to wrap up by December 15th, 2025.
This December.
This December, yeah. And then the actual transaction closing is officially anticipated sometime in January 2026.
Okay, so early next year.
Early next year. And given the size and complexity here, it's also important they noted that any detailed discussions about synergy realization, how much cost they can cut or revenue they can boost by combining the two companies, that'll only begin after the formal closing in January.
Right. Can't count the chickens before they hatch, I suppose. #tag outro. Okay, so wrapping up this deep dive then, the Q2 results really paint a picture of highly focused execution, I'd say. Torrent is successfully driving that chronic segment growth in India, clearly outperforming the whole IPM, especially on volume.
Definitely.
Internationally, they've got clear momentum in branded markets like Brazil, but they're actively working to mitigate that very specific externally caused supply disruption that's hurting the German generics business.
Yeah, the strategic tension couldn't be clearer, really. You've got the company committing to that slow, systematic, multi-year rebuild of the U.S. generic battleship, as they call it, to ensure stable, long-term profitability,
Right.
the foundation. Exactly. But at the very same time, they're kind of hedging that stability by aggressively pursuing the immediate, potentially massive, high-impact launch of these GLP-1 semaglutide products globally.
Yeah.
It's a classic balancing act, isn't it? Securing the floor while really chasing the ceiling.
It absolutely is. And that strategic tension leads us right to this final provocative thought for you, the listener, to consider. Torrent's management stressed during the call that semaglutide is, and I'm quoting here, a very important opportunity no matter the number of competitors.
Mm-hmm.
So, given that reliance on getting in early, that first wave advantage they talked about, how might an early entry, or conversely, even a seemingly minor 6-month delay in getting regulatory approval for that single product, how could that fundamentally shift the entire strategic balance? The balance between Torrent's established, steady chronic markets and these massive, potentially explosive growth plans they've staked so much of their future on.
Yeah, those Anvisa rulings in Brazil and the patent outcomes in India, they will certainly be some of the most important external catalysts shaping, well, maybe the next decade for this company. It's a lot riding on those outcomes.
Absolutely. Something to watch very closely. Thanks for diving in with us today on Torrent Pharmaceuticals.
My pleasure.
We'll catch you on the next deep dive.